Everybody, now we're going to talk about student loans and how they could affect you. Granted, this is not a factor that affects 100% of Americans, but it does affect maybe 30%. And it's important to understand how credit is affected by student loans. One of the things that I see regularly, almost daily, is someone that has their student loans in a credit report, but they'll actually show up not as one student loan, even though you're only paying one payment a month. They'll actually show up 7, 8, 10, 12 times. I had one earlier today that was 14 times on the report. And I explained, why is this an issue? Well, one, a healthy credit report has 4 or 5 open accounts, not 20, which is what this person had, because one, they had so many student loans showing up on the credit report. But if you think about it, when we go to college, we apply for student aid every semester. We don't get like, when we start as a freshman, we won't get one big check for the next 4 years because, well, maybe not everybody's going to finish and they would be taken off with the money or whatever, right? So you get one loan every semester you apply through the FAFSA process. And when they do that and they issue that check, each one of those has a separate account number. Makes sense. But then when you graduate college, what ends up happening, even though you pay the bill once a month, you log in and it says, okay, your bill is $250, whatever it is. Even though you're only paying one payment, they actually spread that payment across all the open accounts that you have. Why is that a problem? Well, 2 things. One, it oversaturates your credit report with too many open accounts. Like I said, 4 or 5 open accounts is a good number. Well, if you have 14 student loans, rent, and a credit card, now all of a sudden you're up to 18 or 19 accounts, and any little one thing you do in life mathematically just doesn't make a big difference. It's like adding a pinch of salt to a big pot of chili and then claiming to be Gordon Ramsay's chef of the year, right? It just didn't make the difference. It was something else that really did. So what you can do is you can easily go through a process called student loan consolidation. You don't do it with a private company, you do it with the federal government. And all they're doing is simply merging those 14 account numbers into one. And that way it shows up once on your credit report. The other ones will get marked as closed and you'll have this new one that's on there, but you're solving this problem of oversaturation. So Wendy, I'm pretty sure you've seen this over the years here around Carolina, probably not your prior life as well, where you'll see somebody's student loans in their credit report and it'll have multiple late payments across there, all tied to the student loans. The problem is if you don't have them consolidated, you get this one $250 payment that you make each month, and they spread that payment across all of the accounts, right? Well, if you have one 30-day late on this $250 payment, they'll give you a 30-day late on every one of those account numbers. The lady I had earlier had 14 account numbers. Truth be told, this happened to me 15 years ago. My credit score dropped over 200 points from one late payment of 30 days or $134, because this was back in the days when we wrote checks, and I think we went on vacation or something, and I just forgot to put the check in the mail, and lo and behold, boom, there it was. You came home and you had a 200+ point drop in your credit score. Okay. That's devastating. And getting that fixed is very difficult. Really, the only solution is you call the student loan company and explain to them what happened, see if they can resolve it, reverse it, or whatever. And if they can't, you're stuck with it. And that penalty is going to last you that 2 years, like we talked about earlier in the late payment penalties. You know, a 30-day late payment lasts for 2 years. Half of it goes away after 1 year, and after 2 years is down to nothing. Well, that's a long time to wait for missing one student loan payment. That's why it's so important to have them consolidated, have a smaller number of accounts on your report because of that. One question that I get when you go through and do consolidation, it is in fact going to drop your credit age for the short term, because you're taking this history that's been on the report and you're merging them, and it basically closes these older accounts, okay? And you've heard, don't close old accounts. This is true. However, you got to weigh the pros and the cons of this whole thing, okay? The risk of keeping them open is pretty scary, okay? It could be a risk of keeping these things open can be catastrophic with one missed payment, okay? When you have to ask yourself, what is my timing on my goal? I'm trying to buy a house, okay? Am I trying to do it in the next 3 months, or am I trying to do it in the next year and a half? Because that gives you other time to balance things out. Now, remember also, when you're consolidating these things down to one, and if you do one more thing like add rent to your credit report, or add your electric bill to your credit report. That can come and offset the balance of this new account showing up for the student loans being consolidated into one. So you really should just have a mentoring session with us at Real Karma when that is the situation, so we can talk about the timing and what other impacts there can be to help you get to the number, which is your goal, which is 720. That's it. I hope it's very helpful. There's a link in the Learning Center, which you can come and visit. If you're seeing us on YouTube or some other place, come and visit, because you want those red flags and you'll make sure not to make those mistakes, and you'll get your driver's extra credit and get your A+ and not have to worry about this stuff anymore in the future.